Welcome to the Spinoff Investing Simplified Spinoff Basics Investing course, brought to you by SpinoffInvestingSimplified.com. Hey everyone, this is Greg Miller and I'm joining you from SpinoffInvestingSimplified.com. And today we'll be talking a little bit about cyclical industries and how they affect your spinoff investments. First and foremost, we need a quick little overview of what a cyclical industry is. Cyclical industries have their ties to the business cycle, and just basic business cycle 101, the business cycle starts with an expansion, then you get to a peak, and then you have a recession, and then you go back to the trough. And I'm not going to spend a lot of time on the peak and the trough just because those are typically the month right before it switches from expansion to recession or vice versa. So we're just going to look at the other ones real quick and identify how they affect your spinoffs. So during the expansion cycle or expansion portion of the business cycle, this is when you will see increasing employment, you'll see economic growth, and you'll see an upward price pressure. And this is on all sorts of different things, like the commodities that are being used. It'll be upward prices on oil, it'll be upward prices on food, and you'll see increasing employment. Upward price pressure also includes upward price pressure on your stock portfolio as well. And so investing during an expansion always feels good because you're always feeling like you're doing the right thing. But this is one of those places where you can really get caught and make mistakes. So pay attention to when you are during an expansion, and particularly when you're towards the end of an expansionary period, you have to be very careful about what might happen next, because a month later or so, you might be jumping into a recession. I'm filming this during the COVID-19 economic fallout, and so we haven't quite gotten to this point yet, but 2 consecutive quarters or more of economic contraction, which seems like it might be likely given the in the United States, at least, the last reporting that I've heard is there's about 22 million people that have applied for unemployment. And so that falling employment is one of those indicators that we're entering into a recession. That'll also be correspond with falling prices, and we've already seen some falling prices in the stock market prices as well. And then you also have those 2 consecutive quarters of economic contraction, which we haven't quite gotten to. I'm filming this in April of 2020, and I'm sure that that'll be a couple months out before we get to that point. Typically, your recessionary periods are shorter than the expansionary periods. That's not always the case. Sometimes recessions can be very long and they can turn into what we call depressions, even though we don't have a specific definition for a depression. And a recessionary period, however, will be characterized by all of these different things. So what does that mean for you when you're investing in cyclical industries? Well, first you need to understand what your cyclical industries are. And this is not a comprehensive list, but it does identify some of the things that you should be paying attention to. Energy and mining are typically cyclical industries. And think of your oil, your gold, your silver, your coal. Any extracting or servicing and transportation companies that are associated with these will also be tied to the cyclicality of that industry. I made some pretty good money buying some shipping companies at the end of the last recession because they just grew normally because they were in the energy, mining, and that transportation company moving this type of equipment around. And so you can make some pretty decent money getting into the cyclical industries as long as you get into them at the right time. Housing is another one, but sometimes it's counter-cyclical to some of the other things that are out there. So it may not completely mimic what you might see in the stock market. And so that's one of the reasons why people get really excited about real estate investment trusts or certain banks and stuff like that. Heavy machinery, think your Caterpillar or John Deere tractors, those types of things, that equipment that lasts for years after purchasing. and they're used for their business expansion. Again, this is equipment that is used during expansion. So that's why this is such a cyclical industry, or will be tied to the cyclical nature of the business cycle. And then I don't think it goes without showing that if you don't have discretionary income for automobiles or to fly on planes, that those industries will also be affected by the cyclical nature of what's going on. So with that in mind, when you're investing in spinoffs throughout a business cycle, some of the cautions that I would recommend that you pay attention to. First, you should know which companies you have that are in cyclical industries. If you don't know that, then you probably shouldn't be investing in that anyway. And then know what part of the business cycle you're probably in. So you are probably pretty sure that you're in an expansion or a contraction. You may not know if you're at the peak or the trough, but it doesn't really matter on those. What you want to know is where you're going to be in 6 to 12 months. Is that the direction that you're going to be going? Do you want to follow a loss for the 6 to 12 months that are happening and then just hold on through that loss? Or do you want to wait for it to go down a little bit more before you buy into it? A great example right now, the oil industry is getting crushed. You had the COVID-19, so there was less oil that's being purchased. And then you also had the Russian and Saudi oil wars, and OPEC is getting all bent out of shape out of what's going on over there. And so basically we've gone to having to cut production across all the oil players, and they're going to have some difficult times right now. However, that can reverse very quickly. And once that reverses, that turns into an opportunity to make quite a bit of money. With that in mind, you should also pay attention to cyclicals recovering very quickly, and they will outperform the rest of the market when the expansion resumes. And so sometimes getting into those cyclicals is a good opportunity. I think it was Peter Lynch that talks a lot about cyclicals as a great way to make your 10x type opportunities. And I agree with him. I think that sometimes it's a good opportunity to do that. Are we in an expansion? Are we in a recession? My personal opinion is, as of April of 2020, right now we're getting into a recession, and it might be several months before it's time to get back into a cyclical, but this might be a good time to get into the cyclicals that you think will make it through the recession, because they're going to come out on the other side much better and give you significant performance over the next several years. So that's what I got. Good luck on your investing, and if you liked this video, please subscribe, and you can shoot me a note, and you can always catch me at www.spinoffinvestingsimplified.com. Thanks a bunch, guys. Good luck with your investments. As we finish up, we have one final note for you. This video was made for educational purposes only. Any companies mentioned in this presentation were discussed for educational purposes only. Discussing such companies and the specifics about them is for illustrative purposes only and not a solicitation to purchase them. We recommend that you conduct your own research and identify why you might want to own the company yourself before you commit any funds. We also recommend that you seek the services of a financial advisor that has considered your situation as your fiduciary. May your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks.